Binance to pay $4.3 billion to settle U.S. criminal case. Changpeng CZ Zhao resigns as CEO and pleads guilty in Seattle. Richard Teng takes over as CEO of the world's largest crypto exchange. Binance, the world's largest crypto exchange, was criminally charged with breaking sanctions and money-transmitting laws and agreed to pay $4.3 billion to settle the allegations in one of the largest penalties the U.S. has ever obtained from a corporate defendant. Founder Changpeng CZ Zhao pleaded guilty in Seattle to charges he personally faced and agreed to pay a $50 million fine, as well as step down from the CEO job. Richard Teng, a former Abu Dhabi regulator and later Binance regional markets head, will take over as CEO. Binance was accused of failing to maintain a proper anti-money laundering program, operating an unlicensed money-transmitting business and violating sanctions law, according to a court filing unsealed on Tuesday. Zhao pleaded guilty to violating the Bank Secrecy Act and causing a financial institution to violate the BSA, according to another filing. His fine will be credited against the amount he owes the Commodity Futures Trading Commission, the U.S. Department of Justice said. Binance employees knew and discussed that the company was serving thousands of users in sanctioned countries. And they knew that facilitating transactions between U.S. users and users in sanctioned countries would be in violation of U.S. law. But they did it anyway, Attorney General Merrick Garland said during a press conference on Tuesday afternoon. The $4.3 billion Binance is paying is among the largest penalties ever obtained from a corporate defendant, Garland said. The exchange's overall fine remains $4.3 billion, with some amount being credited to each agency. Separately, the U.S. Treasury Department and CFTC announced their own settlements with Binance. Treasury Secretary Janet Yellen noted that Binance's settlement with her department's money laundering and sanctions watchdogs was the largest in Treasury history. Sam Altman to return as OpenAI CEO following in-principle agreement. I'm looking forward to returning to OpenAI, and building on our strong partnership with MSFT. Altman said in a post early Wednesday. OpenAI co-founder Sam Altman is set to return as the chief executive officer of the artificial intelligence startup nearly a week after he was ousted from the company's board, prompting backlash from employees and key stakeholders. We have reached an agreement in principle for Sam Altman to return to OpenAI as CEO with a new initial board of Brett Taylor, Larry Summers, and Adam D'Angelo. OpenAI said in an X post on Wednesday morning. I'm looking forward to returning to OpenAI, and building on our strong partnership with MSFT, Altman said in a post early Wednesday. Altman was forced out of his role last weekend because he was not consistently candid in his communications with the board. A leaked memo was not specific about why Altman was forced to depart from the company, which said the firing was not made in response to malfeasance or anything related to our financial, business, safety, or security privacy practices. But OpenAI's loss was someone else's gain. Earlier this week, reports emerged that Altman, Greg Brockman, the company's co-founder and president, and other former staff members would be joining software giant Microsoft, one of the key investors in the AI startup. OpenAI's major investors, led by Microsoft CEO Satya Nadella, reportedly pushed to reinstate Altman as CEO and replace the current board following the unexpected firing, with intense negotiations involved in the process. Altman's departure even sparked criticism from hundreds of OpenAI employees, even prompting a note to the board threatening to leave the company to join Altman unless the board formally resigned. Trading crypto on Binance becomes challenging as order book liquidity tanks 25%. Order book liquidity refers to the capacity to trade quickly at quoted prices. The loss of Binance CEO and the leading digital assets exchange's $4 billion settlement of U.S. criminal charges on Tuesday failed to destabilize the wider crypto market in a big way. It has, however, impacted Binance order book liquidity, complicating trading conditions for large traders. Liquidity for top cryptocurrencies on the exchange, measured by 0.1% and 1% market depth indicators, has declined by 25% or more to less than $150 million and around $180 million, respectively. In the past 24 hours, data tracked by Keiko show. Market depth is a collection of buy and sell orders within a certain percent of the mid-price, or the average of the bid and the ask prices. In other words, moving the market by 0.1% and 1% in either direction is now 25% easier than it was 24 hours ago. It also means trading large orders on Binance at stable prices has become tougher, exposing so-called whales to slippage. That is movement between the price quoted when a trader places the order and what they actually pay when the order is filled. As of now, it's still being determined whether the liquidity has moved to other exchanges. On Tuesday, Binance founder Changpeng CZ Zhao stepped down as CEO and pleaded guilty as part of the U.S. settlement. Since then, users have withdrawn almost $1 billion in funds from the exchange. Over $200 million in crypto futures bets liquidated as Bitcoin slumped under $36,000 on Binance settlement. The overnight price volatility in Bitcoin and other cryptocurrencies washed out a notable chunk of leverage from the market. With Bitcoin alone seeing more than $65 million worth of liquidations in futures markets. Binance's settlement with the U.S. Securities and Exchange Commission on multiple charges spurred a market decline, with the impact felt most by futures traders betting on further growth. Data from CoinGlass show, exchanges have liquidated crypto perpetual futures positions worth $227 million in the past 24 hours. Bullish longs accounted for nearly 80% of the tally. Meanwhile, over $67 million worth of Bitcoin longs and shorts, referring to bets on and against price rises, respectively, have been liquidated in the past 24 hours. This was among the highest liquidation events in 2023. Traders of Ether futures took on $27 million in losses, while Solana's SOL traders were hit for $10 million. BNB saw a comparatively smaller $6 million in liquidations. BNB is the token of the BNB ecosystem, which was created by Binance, and traders usually link the token with the exchange's fortunes. Traders at crypto exchange Binance took on $100 million in liquidations, the most among counterparties, with OKX taking $62 million. Liquidation refers to when an exchange forcefully closes a trader's leveraged position due to a partial or total loss of the trader's initial margin. It happens when a trader is unable to meet the margin requirements for a leveraged position. Large liquidations can signal the local top or bottom of a steep price move, which may allow traders to position themselves accordingly. Such data is beneficial for traders as it serves as a signal of leverage being effectively washed out from popular futures products, acting as a short-term indication of a decline in price. Volatility. Binance, the world's largest crypto exchange, was criminally charged with breaking sanctions and money-transmitting laws and agreed to pay $4.3 billion to settle the allegations in one of the largest penalties the U.S. has ever obtained from a corporate defendant. Justin Sun confirms HTX, HECO chain exploited after $100 million in suspicious transfers. HTX withdrawals and deposits have been temporarily suspended, and all losses will be covered by the exchange, Sun said. Crypto exchange HTX and blockchain protocol HECO chain were hacked for a cumulative $97 million in various tokens earlier Wednesday, Justin Sun, one of the investors at the exchange, confirmed in a post. Sun said HTX will fully compensate for any losses originating from the exchange. Deposits and withdrawals are temporarily suspended while the remaining funds are secure. We are investigating the specific reasons for the hacker attack. Once we complete the investigation and identify the cause, "We will resume services," Sun said. Blockchain security firm Cyber flagged suspicious transfers to the tune of $85 million earlier Wednesday. It said in a message to CoinDesk that the attack was due to a suspected private key leak, which allowed their holders to access the HECO bridge, which lets users transfer tokens between HECO chain and Ethereum. HECO chain was set up by HTX, which continued to be one of its maintainers. A HTX spokesperson told CoinDesk that HTX and HECO chain operate independently. The incident follows a smaller $8 million exploit of HTX in October, where hackers were able to steal 500 Ether from the exchange. All losses were fully covered in the days following the incident. That's all. Subscribe to the channel and see you soon.